Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're moving higher today. 10-year note futures trading higher now for a fourth consecutive session. Today we're looking at the futures market retaking the 111 handle, 111.01 for that September future, and pushing back up towards the top end of the recent range. We did see some heavy selling late last week that moved us lower, but now with 4 consecutive days of higher price action, we're back up towards the top end of the range, which was achieved in the middle of last week. Driving factors, primary driver data points this morning, highlighted by PPI coming in below expectations after CPI coming in below expectations in the previous session. Those factors are certainly contributing to the higher price action in the Treasury markets as, again, the idea is as inflation continues to hold or moderate, that the Fed may become a little more proactive later in the year. Couple that with weekly jobless claims continuing to tick a little higher each week now, and we're seeing this little bit of a softening in the labor market, and that's another contributor to, I think, why we're experiencing buying pressure in the Treasury markets today. Looking at the yields, the 10-year yield is down 5 basis points today to 436 basis points. We did see it a little lower early in the session. We're off those lows as far as yield. We're off the highs as far as price for the futures market, but still at the top end of the range for today from the price action standpoint, and yield still at the lower end of the range, even though they're off the intraday lows at 436 for the 10-year. And also the yield curve is a little less steep today as we're seeing that back end rally harder than the front end, moving those yields lower. So we're seeing the yield curve lower across the entire curve pretty much. But it's from the 2s to the 30s where we're seeing the most pronounced buying pressure, with the 2-year yield down about 3.5 basis points, but the 30-year down about 7 basis points. So again, as you slide across the curve, we are seeing more aggressive buying pressure on the back end of the curve today, a little less steep. And the 10-year, as it continues to maintain this upward momentum, now moving back towards the top end of the recent range, which also corresponds with the top end of the range for the past 3 weeks.